Dow Jones Industrial picked up just over 1%, while the S&P 500 moved 1% to the good, while the Nasdaq Composite was moved by a similar margin, edging ever closer to 6,900 points by close. It seems we've shaken off a bit of the cobwebs and we're getting into some positive territory. Of course, they were completely down in the doldrums when you consider the market picture for 2018. So things have gotten slightly better, but how much better do they look today? Let's check that now. Well, as you can tell there, the rand moving back below 14 rand against the US dollar. Bit of a topsy-turvy turn there, really, when you consider just how things have flowed of late. And the interesting part as well, the oil price as well, going to around $60 a barrel. Some fears maybe. Makwe Masilela from Makwe Fund Managers joins me in studio, and perhaps we can unpack that a little bit more. Makwe, thank you so much for the time. It is an interesting one. The rand vacillating between one side and the other side, so that must be key and quite of interest.
By all means, and it's all because of what is happening with the US dollar. I mean, and the US dollar relying mainly on what is happening with the developments when it comes to trade talks between the US and China. And we just understand that they just completed the unscheduled day 3, and so far the guys are positive that things are happening. Yeah. So now what you have to work out is that if the market starts to be positive that the world economy is going to start growing, then people don't have to be fearful and start going into safe havens like the Japanese yen and the US dollar.
Are you positive for the year, though?
For now, yes, things look okay, because by all means we cannot afford, whether it's China or US or South Africa, to have a slowing down of the economy. Yeah. And worse, none of the countries can afford to be able to be sustainable if there are any tariffs. But on the same breath, we have to make sure that the way things have been done, we all know what China has been doing, it cannot continue. Things have to change, but in a way that we hope is not going to be disruptive. Yeah. But change has to happen.
Very quickly, before we go out to our topic of the day, I wanted to just chat about that oil price. At $60 a barrel, it's not too worrisome, is it?
Not that much, but bear in mind and be careful what is happening with the US, because the US at some point they'll be able to produce almost 12 million barrels per day. So far they're sitting at almost 11.7, and I think that's the big one to watch. And given what is happening with the cuts that OPEC agreed on late last year, that might take oil prices somewhere.
Yeah, okay. Certainly interesting. But the theme for today, the fourth industrial revolution, quite significant when one takes a look at the stocks that have hurt the market globally, specifically this year, only into day 9. But already the JSE down around 1% for the year. Hopefully it does retreat back today. But we saw the likes of Facebook hurting last year. Apple this year is hurting. Samsung is hurting. The tech stocks are a little bit worrisome, if you ask me. There was a big tech stock tumble, particularly. As you can see, we have the graph as well up there. The likes of Apple falling down 35% between September and January, right? Amazon as well, 19%. Alphabet, which of course holds Google, going down 10% between September and January. These are unprecedented losses. Facebook losing as well, 40%.
You know, maybe just to put it in good context, you know, Apple itself, within 3 months, it lost more than the GDP of South Africa, because it lost almost more than 6 trillion. Yeah. That's far more than the GDP of the country. Sure. But I think since Christmas Eve, we have started seeing an uptick when it comes to FAN stocks, you know, especially your likes of Amazon, stuff like that. They've been going up steadily, but yes, still on the negative territory. And the main reason, tech stocks are positively correlated to trade issues. Yeah. So the minute you see developments that side, positive developments, as an example, take what is happening with Naspers today. Naspers is up, it's nice, just under 3% because of the positive news that we're getting. And these kind of stocks, they tend to be priced for perfection, meaning any slight mistake, then you see a serious downfall. But yes, they still have a long way to recover.
Do you think that they will continue to go down, or is this perhaps, hopefully, the bottom?
Hopefully the bottom, but news coming out of Apple as well yesterday that they managed to reduce the volumes of iPhone production by 10%. It tells you that the guys are not too happy, and they did mention that the slowing down in China is affecting them. Yeah. Samsung as well, you know, having the bad numbers. That tells you that yes, it's not looking okay, but if we see global economy starting to pick up, and mainly if there's good movements or developments when it comes to trade issues, then tech stocks should be able to do well, because if you check their fundamentals, they're still solid, valuations still solid.
Yeah, one would have hoped that these are the companies then that are expected to perhaps lead as well in that fourth industrial revolution. Do you see them continuing to innovate? Because one would say that the space is so tight that there's perhaps not much more that they can do.
Depending what's going to happen with the fourth industrial revolution, number one, we hope it's not a hype. Number two, we hope it's not uneven. Thirdly, we hope it's not disruptive. If it gets to work out perfectly, these are the kind of stocks that people have to benefit. Apple, as an example, they've just made almost 100 billion from their fiscal year, not from the iPhone sales, but from other things, iCloud, health, stuff like that. Yeah. So they themselves as well, they're positioning themselves to say, how can we capture this opportunity?
Yeah. Anything you're looking out for, particularly for 2019? 2018 was horrible, it's dead and buried, luckily for now. But moving into 2019, a lot of people calling the words optimists, but I would say cautiously optimistic. Would you agree with that sentiment for 2019?
I'm saying industrial stocks will continue to do well, because industrials, they continue to produce. Yeah. People need things out there.
Makwe Masilela, appreciate your time this afternoon. Happy New Year and all the best for the remainder of it, and we'll continue to unpack the markets, of course. Makwe Masilela is from Makwe Fund Managers. Now, after the break, we continue with our focus on the fourth industrial revolution. This time, Nompu will be taking us through what skills are pertinent to be part of the technological revolution.